between. So let's start with the macro analysis. Now, I know some people don't like this equation, but I love it. And, you know, all it takes is a little multiplication and division. So on the far end there, you've got GDP per capita. And really what this does is it breaks it down into its key elements. There's really two sources of GDP per capita. There's work, the number of workers, how hard they work, how many are employed, that's the three measures effectively, and then how productive those workers are, what is output per worker. So the first one, age profile, is the number of people in your economy in the typical working age population, 18 to 64 years old. The more people you have in the working age, the larger proportion of your economy is likely to be working, so of course the more GDP you're going to get per person. The second is basically the employment rate, utilization. How many of those people that could be working have jobs? And then the third one is intensity. How many hours do those people work? So hours worked. And then finally productivity is what is the output. And what you can see is you can see the breakdown. You can basically take GDP per capita apart into its pieces. $12.1 billion. So the methodology is we compare GDP per capita to the GDP per capita in what we call peer jurisdictions. And this year, this annual report, we've actually changed the peer comparisons from previous annual reports. There are 10 peer jurisdictions, so with Ontario, 11 in all. And these peer jurisdictions are places that have economies that have similar characteristics to Ontario. So the sectoral distribution of employment across industries is roughly comparable. The population size is roughly comparable. The level of education is roughly comparable. So, for example, if you look at Canada, you won't see Alberta there, because Alberta's economy, of course, is much more based on oil and natural gas extraction than Ontario. So it's not really a very relevant comparator. We're not going to look like Ontario. We're not going to look like Alberta. We don't have very much oil and gas. So these jurisdictions are deliberately picked. These are very realistic aspirations for Ontario, in the sense that they have similar characteristics. And you'll see that these we've got a couple from Ontario, a couple from Canada, British Columbia, and Quebec, a number of U.S. states. They're very comparable to Ontario, and then some small to medium-sized countries: Netherlands, Sweden, and Australia. So when you look at GDP per capita in Ontario compared to these peer jurisdictions, how does it do? Well, it continues to lag. You can see that the median, Tennessee, roughly $58,000 per person. Ontario, $340,000. So a prosperity gap, as we call it, of $2,740 per person. Now that's quite a bit smaller than, if you've been following our work, that's actually quite a bit smaller gap than in previous last few annual reports, but those numbers aren't comparable. We changed the comparator jurisdictions to one that we really thought were extremely relevant. So let's just unpack that a little bit. So this shows you, starts off with the peer median. Now that black bar, it's good, you want to be in the black. The black bar reflects Ontario's age profile. And it actually turns out along the age profile, Ontario actually has an advantage. We have more people in Ontario in between 18 and 64, in other words, your sort of typical working age population, than the median of these other jurisdictions. And that really reflects the fact that there are a number of jurisdictions, Sweden, Netherlands, Quebec, and BC, which all have a larger proportion of people over 65. So, if you just looked at that measure, we actually have a lead. You can then see the next three measures are pretty much a wash. either zero or very small negatives, but nothing to really focus on. I will say that just because it's a wash doesn't mean our goal shouldn't be to be the median. Our goal shouldn't be to be average. There's certainly opportunities even in these to be above the median, and as we highlight in the report, opportunities to get more women in the workforce, more people over the age of 65 in the workforce, more Aboriginals in the workforce. There's certainly opportunities in Ontario to increase labour market participation of our available workforce. But where we really lag is in productivity, output per GDP, and in fact, we're so far below the median on output per worker that actually offsets our advantage in terms of the proportion of our population that is in the working age. And as a result, we were below the median by $2,740 per Ontarian. Now, as I said, typically in the past we've calculated, well, what would it take to get Ontario back to the median? But that just seemed like such an average game. Who wants to be the median? Who wants to be average? Why not be above average? So if we could just get our productivity back to the median, given our other advantages, we would actually have a prosperity premium. And that premium would be $4,710 per Ontario citizen. Wouldn't you like $4,710? Let's get to work on this. Okay, so let's get to work on this. So, as I said, in past reports, we really focused much more at the aggregate. And we decided this year that we really needed to look under the hood and dig down. What are the pieces of the Ontario economy that are really driving growth? And we focused on 4 sectors: finance and insurance, life sciences, metal ore and mining, and motor vehicles, parts, and manufacturing. And I'll just flip to this next one quickly. So what do you see about these sectors? So the first one shows GDP per worker. So this is productivity in these sectors. And then the gray bar is the Ontario average. And what you see is that all these sectors are almost double. One's more than double, and the others are almost double the productivity of the Ontario average. They're all, and with high productivity comes high wages. You can see that on the far one there. So the average wage premium, or the wage premium in these sectors, is between $200 and $760 per week. Every worker, on average, making at least $280 more per week working in these sectors. The highest is $760. And when you look at the fact pattern across sectors, what you see is that sectors that tend to export a lot tend to be more productive, have higher wages, invest more in R&D, more in machinery and equipment, and more in people with advanced skills. And you can see that here. You can see that here on R&D. The bottom is the export intensity of these sectors, and you can see that's very high. Between 6 and 12 times the Ontario median. So these are very much export-oriented, and they tend to be heavy in R&D. I will caution, financial services, unfortunately, the service data is somewhat limited on a provincial level, so we don't actually know what the exports on a provincial level of financial services, but we do know that a number of our large financial services companies have large operations outside Canada. Scotiabank, big in LATAM, TD, Royal, large U.S. operations, Sun and Manulife, big Asian operations. So we don't know what that number is, but I would suspect it's reasonably high. If you look at the policy framework in Canada, it really has started by focusing on getting a solid foundation. So low stable inflation, prudent fiscal policy, low corporate taxes, access to foreign markets with free trade deals. And, that's a key foundation. Then the next layer is there's some things we know that the private return is lower than the public return. And so governments tend to subsidize those, either directly through subsidies or indirectly through the tax system. So R&D, education, these are things that have a higher public return than private return, and so they get subsidized. Now the thing about these policy levers is, as I think they're the right things to do, but they're quite indirect. And I think what we're seeing increasingly is that governments, if you want to win an increasingly winner-take-all global marketplace, governments are going to have to provide more direct intervention. Now, we all get very nervous with the idea of governments picking winners. But I think sort of the message here is that you really need to get global scale now. You've got to get a secure position in the global marketplace. And to do that, we're a small country. We have to concentrate our efforts, and that probably will take a more direct approach by government. Governments shouldn't be picking winners, but they should be doubling down on the places where we really have an opportunity to win. The reality is much of government policy is helping the sectors that are struggling, the sectors that are not winning. Not enough of it is directed towards the sectors that actually are winning and have the potential to win. And the more we can grow those sectors, the more we can raise our prosperity. And fortunately, Jameson is going to come and give us the heavy lifting here and tell us how we're going to do that. Jameson, Executive Director of the Institute, over to you.